JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 29th of June 2022. So yeah, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Brokers website, which you can check out for more information about us. So yep, feel free to visit us here on jfdbrokers.com. Now then, jumping into the charts, guys, the first one I want to pick up here is Nikkei 225. Okay, so we did get a move higher, but look at this. I mean, this is what I mentioned before, that if we jump above this barrier, above this 26,950 territory, yes, I'll aim higher, but as I said to you yesterday, I will be very careful with the with these EMAs, the 100-day EMA and the 200-day EMA. So we got a nice little hold up here near this 100-day EMA, and we drifted back down, back below this 26,950 territory, and we found support near the near this 21-day EMA. This is where a bit of an adjustment has to be made. I think this level was ignored. I mean, initially it was fine. It did do the job. Let's say for us, let's say for the upside, we did aim higher, but as you can see, it kind of the index drifted. Actually, the futures market drifted back down. So it was mainly driven. This decline was mainly driven by the slide in the U.S. equities yesterday. So yeah, and this is the reason, this is the result now we're seeing. So let's go slowly on this one and probably step by step. So now I will remove that level and I'll actually focus on yesterday's high near the 27,062 territory. So we're the positive side. On the positive side is the fact that we are still trading above the 21-day EMA. However, in order to get comfortable with, let's say, with further upside, I would like to see a push above this 27,062 territory right there, marked by the high of the 28th of June, which is yesterday. And at the same time, if we push through that barrier, this will confirm a forthcoming higher high, and at the same time place the index above the 100-day EMA, and then we could start aiming for that 200-day EMA, and so on and so on. For the downside, now this is where I have to adjust a few levels. I think that for the downside, I would like to stick actually to this 26,665 territory right there, or in a way I think we could maybe put it as 26,666 level, so just for that ease of remembering. So if we do, previously I talked about this hurdle here, which with the potential, the lower side of the potential range pattern. But again, given that we moved a lot away from this lower side, then yes, I mean, I'll keep an eye on this little hurdle right here, this 26,666 level. A nice drop below it may attract more sellers into the game, because at the same time we might see a break of this upside line right here, and then yes, more sellers, like I said, could join in. So at the moment, yes, I am keeping an eye on this. I am keeping an eye on this hurdle, this 26,666. For the downside, if we do drop below it, at the same time we'll break this upside line, and yeah, potentially more sellers could join in. So pretty straightforward, guys. I mean, like I said, waiting for a move through one of these levels that I just mentioned. Good morning to you too, Evu. I can see you in the chat room. Yes, thank you very much for the comment. Good morning. I hope everything's well with you. I hope everything's well with everybody else who's joining in right now. So, guys, good morning to all of you. But let's jump back into the charts. So, Shanghai Composite. Shanghai Composite, guys, okay, still holding on to this upside line, still trading above the 3,356 territory. So in a way, everything's still kind of looking quite positive, somewhat positive, I would say, because we're still trading above this barrier right here. So yeah, at the moment, I will say I'm still kind of I'm still aiming higher overall. But if we do break this upside line and we drop below the 200-day EMA and below this level, this highlighted territory right there, well, yep, I mean, we could start maybe considering a bit of a move lower. But again, we'll have to be very careful here, because if we do drop below this area, then we would have to we'll have to just keep an eye on those two EMAs here, the 21-day and the 100-day EMAs. So yeah, the moment I'm gonna, like I said, I'm gonna keep an eye on those. But overall, I'm still kind of leaning somewhat to the upside. The German index, DAX. Okay, so this one's a mess. And I think that needs to be relooked at, and I think everything has to go here, because basically I stopped liking what I'm seeing here. So it's really, like I said, it's just becoming a little bit annoying. I mean, some of the levels will remain. So let me just remove everything and have a fresh look. So what I can say here is that basically we are, of course, I'm gonna keep an eye on this downside line right there. Tentative, of course, but nevertheless it's a downside line. I'm gonna keep an eye on that one. Now, like, let's put it this way, if you're looking for some higher levels on this one, if you're looking for some higher levels, then certainly yes, there is a bit of a problem with some obstacles on the way north. Bear with me one moment, guys. Let me just check where we are at right now with the cash index. I think there we go. So we are currently sitting at around 13,155 levels. So basically below yesterday's close, but still okay-ish. Not, let's say, somewhere below, not somewhere below this hurdle, which is the current lowest point of June. And somehow, I mean, we do have, what, 3 days of trading left. It's going to be quite interesting, actually, if sorry, 2 days left of trading. Yeah, there we go. 2 days left of trading. If we somehow drift below this 12,912 territory right there, I mean, first of all, this will confirm a forthcoming lower low. More sellers could join in, and this could open the door towards this area right there, the 12,438, which is the lowest point of March. But at the moment, I mean, if you're looking for some upside, probably the easier option is to, first of all, keep your eyes on the current highest point of this week, near the 13,378. I talked about that level, but I also mentioned this level here. This one right there, the 13,444. So you could in a way just keep an eye on this area in general, but of course on the way higher, if we do push through this area, on the way higher we do have straight away the 21-day EMA, but if that one gets broken, there we go. I mean, this is where, you know, more excitement could come in. So either way, if we to sum up the idea that I'm mentioning here about the upside, is the, let's say, yes, ideally, preferably just to wait for a push maybe through that 21-day EMA would be great, but I don't want to, let's say, maybe miss out on some of this area. So just, but of course we'll have, you know, some stop losses in place. I mean, just that's quite important, because again, this is still very tricky. So if we do push through that 13,378 territory, yes, I'll aim for the upside. But if suddenly this starts reversing, you know, against me, I will, you know, it's better liquidate it as soon as possible, because again, it's not, you know, it's not really bullish here. We're kind of counter trading a little bit. So that's why you need to be very careful here. So So yeah, with DAX, that's the story, unfortunately. In general, it's not really looking quite, great, but maybe we can squeeze something out of it. IBEX 35, again, something that I mentioned to you yesterday. I don't look at this one very often, but yeah, as I said before, we're in a bit of a range here and some consolidation. So the prevailing trend was to the downside. So according to all the TA rules, if we see something like that, and if we see, let's say, initially a strong decline, then we see some consolidation, maybe a range or maybe a flag of some sort, then the prevailing trend kind of normally shows the further direction. But again, we've seen this happening many times differently. So maybe this could end up being a double bottom here. So who knows? At the moment, we can only go from what we see. So if you're comfortable with, let's say, if you want to get comfortable with the upside, then of course push through this barrier, and the index staying above this barrier would that's what we would need to see. For the downside, a drop below this 8,025 territory here would do the trick for a few more sellers. But again, also not only a break, but also the index staying and maybe even closing below this area. That's what we would need to see for in order to get comfortable with the downside. Nasdaq 100. So as I said yesterday, Nasdaq or in general U.S. equities did decline. Let me just quickly double check something. Yesterday the Nasdaq was the biggest loser. Technology sector, I mean, first of all, it was consumer cyclicals, and then it was technology. So yeah, but the best performing sector, well, guess what? Energy. Of course, we can feel that at the pumps. Yeah, at the moment, looking at this picture, guys, I mean, this is not really looking quite positive, because what I mentioned to you previously was that if we do drop below this 11,751 territory, then I'll get comfortable with, let's say, further declines. And to be honest, at the moment, I'm going to stick to my words. And as long as we stay below this barrier, below this hurdle, I'm going to aim lower. If we somehow climb back up here, I'm going to take a neutral stand, because, for example, for me, for the upside, I would still need to see a push above that 12,176 territory right there, which is the current highest point of this week. So let me just put an arrow here, and there we go. Now, DXY, the dollar index. Beautiful pop. So this is one of those moments where I mention as well that, let's say, if it seems that there could be a possibility for a let's say a descending triangle or an ascending triangle, so if you know the theory, then you know which way they normally break out. But what I said to you yesterday, that in general, what I kept on saying actually for quite a while, wait for the confirmation break, and not only that, wait for the instrument to stay kind of below or above a certain level. And in this situation, what I was saying to you recently, that yes, I was leaning a little bit more towards the downside, but I needed to see to go further south. I needed to see a nice good drop below that 103.85 level, and I needed to see the index staying below that area and also staying below that 21-day EMA. We got a bit of a flirt here, so it was flirting for 2 days, and there we go, boom. Yesterday we rebounded and pushed higher and broke the downside line. So that's why right now, I mean, it seems that yes, we are kind of we could be on track for higher levels, but yeah, let's see how this is going to play out. Oh, and by the way, this is where I'm going to go. I cannot wait until I'm going to jump into USD CHF. But okay, with DXY, I'm still going to get more comfortable with the upside if we do push above this 105 territory right there. Gold drifting a little bit to the downside, but still holding on to this area right there, this 1817 zone. So this is what I talked about yesterday. I said that if we drop below that hurdle, then yes, this is where I'll get a little bit more excited with the downside. Again, also, we might be forming here a possible descending triangle, who knows, but it's not really ideal, to be honest. We're missing some touches here. So yeah, it's maybe I'm trying to see something where it's not, but hey, like that's why I have my levels to support me. So at the moment, like I said, I'm keeping an eye on this 1817 territory. If we drop somehow below it, then yes, I'll go to the downside. at least until 1807. WTI oil. Okay, so this one is yeah, finding some resistance near that 21-day EMA. However, still the idea is still valid. So what I said to you before, that if we climb kind of, and if we clear you know, some of those levels here, I mean, if we climb back above the subside line, previously I had this downside line as well in there, so I said if we do push through the crossroads of that, you know, of those two lines, then yes, I'll get a little bit more excited with the upside. So for now, yes, we're seeing a nice good a good move, let's say a good hold up near the 21-day EMA. Can we overcome it? If we do, then I'll continue aiming for that 114.79 level, my favorite one for the past 3 months, and that's the highest point of 2011. Ethereum, guys, Ethereum, okay, so this, well, look at this beautiful technical picture here. This downside line is just working, is really working here, and is doing its job, and the question is here, can we see a further decline? Now, certainly that's not what the bulls would like to see, but you know, at the moment it's not really the crypto kind of time. However, some of the bulls will still argue with me. Maybe, you know, it's the best time right now to you know, go in and hold it. Maybe like in the future it can go higher. Yes, it could, but at the moment I'm just going from what I see right now. If I do get the break of this downside line, at least this first one, the steeper one, then yes, I'll get a little bit more excited with the upside, but still I would like to see a push above this 1,282 territory, because this will confirm a forthcoming higher high, would push above the 21-day EMA, and yep, this could open the door towards some higher levels. Now, the only problem there is this other downside line, which could play out. So, and we do have some other obstacles on the way higher. So, yeah, guys. Yes, we could go higher, but I would say be very careful in that one, because, like I said, if it's going to go here, we still have, you know, another downside line which could provide resistance, and we could slide again. At the moment, I'm keeping an eye on this, but let's say I'm not, jumping in right now. I would actually. Ideally, I would prefer to wait for a drop below this 880 zone, because all this area here could be quite tricky. I mean, it could drop lower, but we could fail to test the 880 zone and then rebound and would push higher. So we've seen such scenarios happening. So like I said, this is one of those moments where you can kind of, you know, get caught out, and a lot of frustration then would kick in, and yeah, everybody would get mad with themselves, and yeah. So at this point I would probably, although maybe, you know, it would be attractive to go long here, but I would say, yeah, confirmation breaks are still needed. With the downside also, similar story, confirmation breaks are needed, but at the moment I'm just gonna observe this one. AUD CAD. So this is something that I actually, before I started the video, it was still above this barrier, and I wanted to mention that, look, I mean, this is a very interesting moment here near this 0.8884 level, and said that I wanted to pick up and show you this one, guys. I mean that you know, there is potential still further downside on this one. However, now what I'm looking at this one, it will still continue sliding, but for how long? Now the question is, can we stay today below this area? If by any chance the pair reverses sharply today and climbs back and stays above this 0.8884 territory, then we'll have ourselves a nice beautiful false breakout, and yep, maybe a bit of a push higher could be possible. So in general, this pair could present itself with a nice opportunity, maybe back to the upside. However, we haven't got a signal yet. So I've just told you one of the signals, if let's say in case it reverses back and stays above this 0.8884 territory, or if it continues to trade below that area. I mean, look at this. We are I'm keeping an eye on this 0.8806 zone, which is the inside swing high of the 31st of March of 2020. There we go. So that's the target, as long as we stay below this hurdle below the 0.8884. USD CAD, guys. USD CAD is a little bit different. Look at this. I mean, yesterday we had a beautiful move to the downside. Look at this. We fell below that 38.2%, and we didn't really. The only little, I have to admit, that didn't really. I would say maybe it worked out like 70-80% only. So the idea was to aim for that 50% retracement, which we almost kind of, I would say, reached, but still not as I would like it to be, but this is one of those moments where I keep on saying that, let's say, for example, if there is a level and if you're waiting for a breakout, and if it's working in your favor, quickly, guys, put your stop loss on a break even, so that you wouldn't lose out anything, because this is exactly one of those moments. Because look, I mean, we went lower. It looked very promising that we could go further south, but then by the end of the day, it kind of reversed. And basically, if you didn't put a stop loss here, then now it's kind of taking you out a little bit. Probably you're you're in the loss a little bit, but okay, it's still not critical. I would say this way, is there an opportunity right now for this one to move higher? I would say yes, because let me just adjust a few things here. Yes, there is. We're rebounding from that 38.2% retracement on the Fibonacci, but I would like to see, and this is a little bit something like a bit of a daring idea. Actually, I'll keep an eye on this little inside swing low, not the 23.6, but the inside swing low here of this 21st of June near the 1.2906 level. This is somewhere like the midpoint between the levels here, between the Fibonacci levels. So yes, if we climb above this and we push above this barrier, then I'll aim for that 23.6, and then I will go slowly further north, if let's say if it breaks above this 23.6. If it doesn't, then maybe a drift back down could be possible. Maybe we could still kind of work around this idea right there. So USD CHF, there we go, guys. Okay, so yesterday I talked about this one and said that, look, I mean, and actually I'm quite excited about this pair, because it seems to be it seems like it could be forming this wide range, I mean, in general. And if that's the case, guys, well, we're stuck here maybe for another month or two. So yeah, be careful with that one, because like at the moment, yes, I think some of the bears are waiting for a breakout. If we do have that breakout and we see the pair staying below it, great, that's wonderful, we could go lower. But if we don't, then yeah, this is where some buyers could come in, and we could see a nice move higher here. So again, like I said, although I have my upside scenario from here, from around this barrier, I would say you could start maybe looking at some higher levels already from this area. The only issues, I mean, this arrow here don't really actually. With this specific one, don't go by it. I mean, maybe this one, yes, but and this other one, yes, but this one, I don't know. Don't, because basically the idea, what I'm talking about here, is that we could see as a push above the 0.9620 territory right there. We could go higher. We may test the 21-day EMA here. And then yes, we could go maybe, if we break this one, then we could go higher. In general, this pair right now is forming something of a bullish kind of pattern in a way. I've seen these, I can't remember what it's called, but anyway, basically, when we have a huge slide like that, and then there is a further slide, but not as drastic as the first one, then we form something like this. We have a downside line. So this is where perfectly it could come in, and this, if we break this area, that's where we could go for some higher levels. So yeah, keep your eyes on that one, guys. with the downside, as I said, the same story remains valid. Yes, a drop below the 0.9545 level right here is required. GBP CAD. So, okay, quick update. Yesterday, this is an additional line that I've drawn yesterday, just for me because I was analyzing this one. Yesterday, if you remember, I talked about this pair and I said that if we drop below this 1.5729 territory, I'll start looking at the downside. Well, guys, I mean, we did drift lower and we found support near this hurdle, near this 1.5683 territory, somewhere around here. So if you're looking for some further declines, then yes, we need to see another drop because we're currently seeing a bit of a rebound from this area. So that's why a small little adjustment has to be made to my analysis here, because this area, yes, we broke this hurdle, we drifted lower, but we found good support near this low of the 7th of June, near this 1.5683. So can we go further south? We need to go. If we want to go further south, then yes, I will aim for this. Well, first of all, if we want to go further south, we need to see a break of this area, this hurdle, and then I'll aim for that lowest point of June near the 1.5485 level. However, if we start rebounding and we start pushing back above this barrier, this 1.5729 territory, maybe we could go for that little larger correction to the upside. However, at the moment, guys, it's not really looking very promising for the bulls. So let's keep an eye on this 1.5683 territory. GBP JPY. So there we go. We are breaking the upside line. So a bit of weakness kicking into the pound. So yeah, it's we don't have much news here today. Only the BOE Governor Bailey speaking. So. I think we do have the mortgage approvals, lending, so from UK, so not something really significant, but still. We're seeing a bit of weakness kicking into the pound, guys, right now. So against its major counterparts, and there we go. We're seeing a break of this upside line. If we stay below this upside line, guys, I'm leaning towards the downside, especially if we also drop below this area right there, this 164.32 level. If we fall below it, then well, further declines are possible. GBP USD. So also finally, yesterday I talked about this and I said we were kind of coiling up here, and there we go. Boom, yesterday we finally dropped heavier here. We came closer to this key support zone near the 1.2162, and let me just show you what that level is. That has been dragging here for quite a while, since around the low, the 22nd of May 2020. Yeah, also back in May it also provided strong support to the pair at this level I'm talking about. Yeah, and now let's see if we can break it again. If we can break it, then great. For the sellers, we could see a further slide, but if we cannot, we may be a bit of a rebound. But to be honest, it's with the upside right now, I'm just observing it. However, I'm more interested in the downside because we're near this key support zone. GBP CHF, look at this, guys, further slides, and to be honest, the moment is just one-way traffic. So I feel sorry for the bulls here because there might be caught up here in this bearish activity, but we are approaching quite a important resistance area. Support area near the 1.15, actually 1.16 zone, the lowest point of September of 2020. So let's see if we can actually reach that area. At the moment, I'm leaning towards the downside, guys. Like I said, my target is the 1.16 zone, and then I'm going to take it from there. Euro JPY, also quite interesting, drifting lower. So yen buying is kind of coming back into the game, as you have seen already with GBP JPY, and you can see the euro is also weakening against the Japanese yen. This is not the kind of maybe the super weakness of the euro or something. It's just the fact that it seems that market participants are buying the yen now due to markets failing again. So there is a bit of a fear coming in. So the markets are kind of coming back to the bearish mode. Let's see if that stays, if that, you know, because at the moment maybe it's just a temporary occurrence. That's why, for example, for me, for the downside on this specific pair, I still need to see a drift below this upside line, a drop below the 21-day EMA, and then then we will go for lower levels. At the moment, at this point, all this area here is somewhat kind of a neutral one for me. Still, we could form a possible ascending triangle here, because yesterday, look at this. I mean, we pushed higher, we found resistance near this 144.25 level, and we drifted back down. So it just kind of proves how important this level is, and we're still above this upside line. So maybe, like I said, it's forming a nice ascending triangle pattern. EURUSD. So yesterday, and before the day before yesterday, I said, well, I'm gonna keep an eye on this idea, this potential idea of maybe of a rising wedge pattern. Well, look at this. We pushed higher. We almost tested the upper side here with the downside line, and we drifted back down, guys. Look at this. This is perfect. This is perfect because, like I said, I was saying, I was keeping an eye on this one and saying that yes, this could be the potential idea, but wait for a break of this lower side. Always on a rising, on a falling wedge, wait for a breakout of one of the sides before, let's say, doing anything, because it could still continue trading within the pattern, and we're breaking this pattern from the lower side, as according to all the textbooks. So at the moment, yes, I'm leaning towards the downside, but I only am aiming for this 1.0460 territory. This is the barrier from which I will become a little bit more bearish if we break it, and if we do break it, then yes, I'll go for this 1.0340 area right there. So guys, that's it for this session. I'll have to wrap it up here. Thank you very much for your views, your likes, your comments, guys. I really appreciate that. Keep your eyes on the economic calendar today as well, because we do have some data coming out from the US, the GDP numbers, so that could be quite interesting. And of course, the crude oil inventories. This is something that we're following lately a lot. So yeah, thank you very much for joining in, guys. I hope you found it useful. Thank you for that, and I'll see you tomorrow at my Traders Espresso, 6 o'clock GMT time. For now, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.